Does crude oil have a possibility to reach $63 a barrel? We are going to start analyzing this sucker right here. Now, if you pay attention to my chart up in the upper left-hand corner, I am on the April 2025 CL contract. So again, that is CLJ 2025. You no longer want to trade in the March contract because that is about to expire. So we are looking at the yearly chart right here. Okay. Yes, we are looking at the yearly chart, and I'm going to give you a foundation to look at as we proceed through the multi-time frame analysis. So make sure that you stick around until the end, where we're going to discuss about some possible setups on some of the smaller time frames. So as we look at CL here on the yearly, the roof there is about 79. We'll just call it 80, 79, 81. And then the floor here is this 63.38. And as we expand this chart right here, we can take a look at the current yearly candle and where we are sitting. You can see here that in 24, we came down to this level. And in 2023, we also came down to this level. And right now, we are pushing a very solid bearish engulfing candle right now on the year. So we're going to be analyzing between these two pivot points as we kind of begin to move down on the smaller time frame. Okay, so as we get back into the chart, let's definitely let you know about some of the upcoming events that are happening and some of the news that is kind of circling around crude oil right now. Number one is, again, crude oil rebounds as Russia suggests OPEC Plus may reserve planned production hike. Okay, so that's the reason why we did have a little bit of a jump up on Friday night over the last couple of days. Second major headline is, what will geopolitical uncertainties do to crude oil prices? So there's a lot of unknowns in what's happening, and this is why it's so important that we focus on trading what we see and not what we think is going to happen. Lastly, U.S. oil and gas rig counts fall. So again, whenever there's a shortage, right, or a depletion of something, that usually can at least temporarily bring the cost of any particular commodity or good up. And then do not forget that this Wednesday, March 12th at 10:30 a.m. Eastern Standard Time, we will have the weekly crude oil inventories report. Okay, so let's go ahead and get back into the chart now, and let's drop into the current monthly chart. And I think this is such a awesome chart to look at. And I think a lot of people have just don't look at these higher time frames, and these higher time frames is really what drives prices. Okay, this is where the institutional money is being traded. It is not being traded on a 5-minute time frame. So my first thing that I want to bring to your attention is when we started dropping here, okay, in July of 2024, and then now to where price made this wick right here, and then we began to see this drop in January of 2025. If you've been following me for a while, you know I'm a big fan, especially on crude oil. I have several videos and teachings on it, on using these Fibonacci levels. Okay, so Fibonacci levels work very well, especially on the higher time frame. So we can see that we had that clear rejection of that 88.6. Nothing went higher than the 100% level. So if there's anything that you can get from this video in a very small teaching opportunity, is understand that if you do the fibs correctly, right, in this particular case, as we're looking for price to go back down from a certain fib level, the 100 fib level, okay, is your exit point. If price was to close above this 100 fib level on this monthly chart, okay, had this wick continued and a candle would have closed up here and we were short selling crude oil, we would need to exit our trade at the latest, the 127 Fibonacci extension. Okay. Now, if you're going to be trading on the monthly level, you should be using, in my opinion, micro lots on futures. Okay. You can make a lot of money just selling MCLs. You don't need to trade full contracts unless you have the account size and the stomach and the emotional resistance to hold trades this long. Most people do not. So you definitely want to look at micro contracts. And again, I trade on Thinkorswim. Love that platform. Been with them since they've been with TD Ameritrade, now with Charles Schwab. Again, find a good broker that has, smaller contract fees. And I would highly suggest for a volatile pair like crude oil that you always at least start by entering micro lots. And then if you've defined direction, you can then go in with standard lots. So again, we saw that Fibonacci rejection to the top side. Now, what's interesting, I'm going to go ahead and get rid of these circles right here, is let's see where price is currently at. So now we're going to do the opposite. We're going to take this low from September 2024, and we're going to take this high from the same January 2025, and now we're going to add a fib level from this bottom to this top. And now you can see here that at least for right now, this is why we had the rise in price, okay, of crude oil. They came down to touch the 88.6, and they have failed to close below the 100 level. So this is why we were buying at this level based on the higher time frame. Now, is that level going to stick around and drop further? Well, that's why we have to pay attention to price action as we drop down into some smaller time frames, because that's where the magic happens. As we look at the multi-time frame analysis, this is going to give you an opportunity to look for entries, not on the monthly, but not on the 5-minute chart either. We are going to do our analysis based on where institutional money is also happening. Hey, just a reminder, if you want to help me out at any point, if you are getting value from this video, just hit the like button for me. That's all you need to do. It's absolutely free, does not cost you anything. And if you are brand new here, don't forget to subscribe and turn on your notifications bell so you do not miss out on key content. Okay, so let's head, now that we have a level playing field and we've established this Fibonacci level right here, let's drop now into the weekly chart. And this is where price ended last week. So you can see here that we have not been able to close crude oil below this level, which we're just going to call it about 64 to 64.50. Okay, your chart and your price might be a little bit different depending on your broker. Okay, and then to the top side, we have not been able to close above this 79.81 level. So we are going to go ahead and remove these fib levels here. We're going to go ahead and remove these circles, which, by the way, is a great tool for those of you who are still learning about Fibonacci and where to place your Fibonacci. That is an excellent tool to look at. So in essence, what we've done now in just a few minutes of evaluating the yearly, the monthly, now the weekly, we've began to analyze our current playing field for crude oil heading into the following week. We understand that there is this low down here that has not yet been violated. We also understand that we are at a Fibonacci level of the 88.6 when it came to the monthly level. So now we are going to drop down into the daily time frame. And this is really where I spend a lot of time analyzing. This is where inside of our trading group, we are giving out trades. I base all my trade alerts based on the daily time frame analysis. And then, of course, we enter Maybe you want to drop to a smaller time frame to see that price action, but my analysis is always between the 8-hour chart and the daily chart, which are fairly similar. So again, we can see here now that we've established a playing field for us for the upcoming week. If we cannot get price to drop below this 64 level, we remain buyers down at this level until price tells us that it wants to close below that level. Very simple, right? Do not make trading difficult. Trading is difficult at the beginning, and this is why communities, healthy, positive communities, can help you expedite your learning process and how quickly you can pass your prop firm challenges and your personal challenges and everything else, because you've got people who know what they're doing, taking the time to explain it to you and giving you the best opportunity with the highest probability of entries. This is why I've adopted a lot of what I do from being 100% of a scalper during my first 8 years of trading. Over the last year and a half, I've really developed more of a swing trader mindset, which I'll scalp and take profits off the table. But then what we teach inside of our club is how to enter with 2 and 3 entries, same risk, right? So if you're risking 1% or 2%, we just break it down into 3 smaller entries, and then we give you different levels to take profits, because you've got to take money off the table, especially for volatile commodities like this. And so we have strategies for taking our first 20, 30 points off the table, leaving some runners in place with protecting those so you don't let a winner turn into a loser. So we will continue to look for buys down in this area until we are proven wrong. Okay, so this is the bigger outlook. Now, when we look at what happened on Friday, we did see that after price rose to 68.31, it hit this level of resistance up here, which was also prior support, as you can see right over here. So this is going to be an interesting level between 68 and this bottom yellow line, which is about 65.35, which is what we had been predicting over the last several Sunday analysis videos, that we were going to head down into the mid 60s. So we did it. We reached the point of where we began to sell crude oil up here near the $80 level. Okay. For me personally, I've only been a seller of crude oil. I've been saying this over and over. I have not bought crude oil. We'll give some buy entries for our members who are interested. But for me, I've only been waiting for the retracements to continue selling crude oil because of structure. Structure is king. And so when structure is bearish, I'm only looking for bearish trades. When structure is bullish, then I'm looking for those bullish trade opportunities. Okay. So as we get back into the daily here, we can see here that we are going to have to wait to see what happens in between these 2 price points right here as the market begins to open and begins to move. So let's go ahead and give you now this 8-hour time frame, because this is my favorite time frame. Okay, the 8-hour, and again, the 8-hour and the daily will look fairly similar, but again, they will not, because guess what? You can see the rejection here on the 8-hour time frame. Even though you saw the wick on the daily, you can see better price action here. So now that we are here, okay, again, we are going to need to wait to see what happens at this particular level. So the first thing I want to do is I want to mark up any potential gap that we might end up having in the market. So this is where price closed. So I'm going to label this gap, because we trade this every Sunday night inside of our private community for not only crude oil, but for all the assets as well. So we are going to see if price opens at a different price point than this 67.05 here. And again, a reminder, I am using the CL April 2025 contract. So again, if your contract is still in March, you are going to have a different price. You should see the same price action, but you're going to have a different price. I would suggest no longer to trade the CL March contract, since expiration is going to happen, I believe, on the 18th or the 19th of this month. So now that we are sitting on the 8-hour, well, we now begin to define this area for coming up, right? We will stay within this playing field. And what I'll do is I'll go ahead and move up this line here. I'm going to go ahead and clear that up right now. And I'm going to go ahead and give you this bottom section right in here, a little bit more defined, because that becomes our playing field for the week on the 8-hour level, right? We'll look for entries at the highs to sell, at the lows to buy, until we are proven otherwise. So what this candle tells me here on the last 8 hours of trading on Friday was that price at least came down to take out about 80% liquidity of this candle. There really isn't too much liquidity left in these lowest candles, but we will look at it as we move down in time frame. Okay, so we are going to then move here now and drop over to our 4-hour time frame. So here is where you can begin to see, even though we've identified the gap, if you look at the last 4 hours of trading, right? This is why you've got to do the multi-time frame analysis. You can see that price did come up, grab about 50% liquidity, and then the market closed at this price point at 67.05 on Friday. So if by looking at this right here, right, if you were to ask me, where do I believe price will go if there was no gap and it was just a normal analysis, the technicals on this is showing that we should be dropping again when it comes to crude oil, just based on these technicals. And even on this 4-hour level, if we put a Fibonacci from this high point down to this low point and we stretch it across, we can see here again, okay, the power of Fibonacci around that 88.6. And this is why I continuously teach and preach this inside of our private club, because if you're getting entries near the 88.6, there's a couple of scenarios that are going to happen. Number one is price may not always reach the 88.6, but it usually will reach somewhere between the 61 and the 88. So even if you're taking an entry around that 78.6, call it right in the middle of that bubble right there, okay, what you do is you lower your risk. The reason why you're lowering your risk is because I've already mentioned several times that your exit point would be any price that closes above this 100 Fibonacci level. Because at that point, price has an opportunity to change course and begin to move in the opposite direction. The trend could change. So this is why if you were entering near here versus trying to enter at the 50% or the 38%, right, you actually increase your probabilities, and at the same time, you lower your risk. So just based on the technicals on this particular chart right here, just if you were asking me to analyze just this section right here, looking at this wick and looking at how the 8-hour or the 4-hour candle closed on Friday, I would tell you we will probably see another push back down. Of course, we have to wait for how the markets will open with any potential gaps in the market. Okay. Now, when we drop to the 1-hour chart, right, this is where we begin to see this consolidation here that began to happen between the 50 and the 61.8. So this is a no trade zone for us, right? Because we do not know exactly what is going to happen. We need price to either come back up so we can sell, or price to come back down so we could buy. Okay. Now, when you start analyzing these wicks, you can take a look at this wick here and you go across. There is some liquidity still pending on this candle. And if you look all the way down here, a quick candle up, major price movement, very little to no wick to the bottom. This is liquidity. This is liquidity. And you can see here, they came back to grab 80% of that liquidity. So this is why I believe that we will eventually come right back down towards this 65 level, because I believe they're going to come back to grab that liquidity. And then whatever happens down at these levels, we will have to wait and see. Okay. So again, because structure is still bearish, I'm only looking to sell up here in this area, or if we get some structure breaks down below this area. But you can see here at this 50% level, okay, so remember that Fibonacci levels are also levels of support and resistance. And if you look over here to your left, you can see that this has been prior resistance, but over here has been prior support. We have basically blocked support levels once, twice, 3, 4, 5, almost 6 times, okay, over the last 6 hours of trading. So this is why we could see a push up in crude oil, right? And then the next fall back down towards these liquidity levels. But we will have to wait and see to what price does in these areas, okay? So we will be taking a look at the gap that is going to happen. And again, The 8-hour chart really will show us and will define us the direction of crude oil. And this is why it's important to be patient with trading and not jump on something or guess what you think is going to happen in the markets, because we've even seen time and time again where a crude oil inventories report on a Wednesday could be a bearish report and crude oil goes up, or vice versa. It's been a bullish crude oil inventories report and price goes down. Those market makers are trying to take your money, so you have to use caution. Again, highly suggest that if you are trading on futures, you always start your initial entry with some micro lots versus a full CL, especially if you have a smaller account. And even if you have a larger account. Okay, I have a larger account and I still enter always multiple MCLs. And then when I see price moving in that direction, I will then enter a CL. So it's a good way to lower your risk at the beginning. And then when you have full confirmation, okay, of trades, or you're going to swing trade like we do in some cases, that's where maybe you then want to stack and add some more if your margins allow it to be. So I hope you got some value on this video. Go down below to the comments and let me know if you think we are going to revisit 65 this week. Let me know. Head over to the comments and let me know if you think that crude oil is going to make one more appearance this week down at this level at about 65, or do you think that we are going to break 68 and head back up into the 70s? And I get back to all your comments within 24 hours. Hey, if from our club members, thank you for being here. We appreciate your support. If you're not there yet, you can visit that website. Pick one of the very cheap monthly plans. My goal has always been to basically take that income to play for the platform and other things that we do inside and keep it very, very cheap and relative, so that people from all over the world, we have folks from Africa, the Netherlands, Amsterdam, US, Latin America, the Caribbean, that can afford, right, about $1 a day to come in and get massive, massive value. And there isn't a month that has gone by that you are not going to make your monthly membership and then a whole bunch more. So come on in and check it out. And if it's not for you and you want to just stay here on FreeTube or YouTube, you're more than welcome. Don't forget to subscribe over here and turn on that notifications bell. And if you haven't yet done so, hit the like button for me so more people can see this video and maybe be introduced to trading for the first time or be introduced to my channel for the first time. Well, we keep it simple, we keep it real, and we keep it authentic. All right. Thanks for watching and have a great trading week.